Hello, Oracles. Oracle Tim here with Vin from Investment Club for episode 11 of Oracle Investment Club Tesla Weekly. How's it going this week, Vin?
Pretty good. Can't complain, although trying not to look at my portfolio too much these days.
Oh, I know. I actually had a video yesterday about the market, and right now it reminds me of my race in Iceland. And it's like it is just you are getting the crap beat out of you just nonstop. You never know when the end's going to be, and just put one foot in front of the other.
Yep.
It doesn't matter. Like think back, back to 2008, 2009, that recession. I wasn't investing back then, but from what I've heard, I mean, think about how much pain we have felt for just 3 months this year. And do you think about back then, it was 2 years. So, when you're in the moment of pain, it sucks for a long time.
Right. And back then, that was really the entire market is down. Whatever you had invested, you lost 50%. Whereas
Oh, yeah.
now, if you look at the S&P and the broad market is actually holding up pretty well. I mean, so maybe the S&P is down 14% year to date, which like not great, but also not a 50% crash. But obviously, some of the stocks we like more are getting hit harder. Those more high growth type plays, and yeah, it just makes me think. It's about the journey, not the destination, right? So like, just you learn what you can, and you just kind of get used to it, and got to just do whatever you're comfortable with.
Oh yeah, and the way I look at it is, regardless of how much pain we're going through now, it will turn around. And when it turns around, the biggest players are going to be the ones coming out. And in my view, Tesla is going to be the top dog. And so I want to get as much now because I don't know when it's going to turn around. I'm assuming, based off of historical data that we have, it'll be when the Fed stops raising rates, will be when the market actually goes into a true bullish run back up. And I don't think it's going to be a V pattern of any sort, but I think we'll finally start to see the whole market trending back up. But that, I mean, the Fed's going to be raising rates probably till at least mid 2023, if not later. So,
Yeah, that
this gave us a lot of time to buy, but a lot of time to, make sure you've got convictions high.
yeah, and it's a great time to buy, and I want to say like play it safe. Just I'm investing as much as I can, but just as far as like margin and leverage, like be very very careful. Like I have like a little bit of leverage that I've used, just because like for option plays, but even that maybe it's 10% of like my total portfolio value. Even that these days kind of like freaks me out a little bit. So I'm like, all right, we're gonna really like I'm playing it like super safe, and just trying to be conservative, and if it's cash I'm investing, that I'm fine with that, whatever the result. But yeah, just like not exposing yourself to even more unnecessary risk.
Oh yeah, I mean, heck, even Elon is trying to delever himself with all the money he's got. Even with the Twitter purchase, he's like, "All right, I'm levered off a Tesla, but let's get out of this as quickly as we can."
Yeah, I mean, yeah, you can't blame the guy for he deserves to diversify a little bit, I think, and the vast majority is going to stay in Tesla. Whether he continues to sell a few percent here and there, but he's fully committed, I believe, to Tesla.
Oh, I know. You're like, "Oh, he's selling his shares." I'm like, the dude has 163 million shares still. It's
Yeah,
not like he
yeah.
just sold out of everything. Calm down.
And maybe I don't know what's gonna come first, Master Plan Part 3, or if he gets another package there, to what was the last one? If Tesla hits
Oh,
like certain market caps, he gets X amount of shares. So he'll yeah, he'll be doing fine.
yeah,
And
and
yeah,
I'm curious if they're going to do it because when they asked him on the last earnings call, he said currently they have no discussions going on. So, like, I'm kind of torn. I'm like, obviously, we know that Elon, being CEO is huge for the company, but some people don't like him as CEO. But I'm like, I think it's a bullish sign if they don't have any talks going on and maybe he kind of steps away and he's just a figurehead versus the CEO, because that shows that the company can survive without him at the helm. So maybe that's a good sign. I don't know. There's
yeah, I think if he left, which I don't think this is gonna happen anytime soon, but at least for let's say the next 3 to 5 years, if he were to leave, the stock would get like hit hard, I'm sure, but the company is gonna do just fine either way at this point. I mean, the longer he's there, it obviously can only help. Like this guy is the best capital allocator of all time. But I do think that maybe when they were in production hell, it would have been different. But like they're so far ahead and becoming just synonymous with EV and technology and making progress, like the place to work if you want to really get some amazing things done with your life, that I think that the company will flourish either way at this point.
Yeah, I totally agree. And looking at where he's at and the fact that he's constantly touting his engineers, constantly touting the production team for putting the factories together. So he has the teams in place to do what needs to get done. He's just kind of pointing the fingers and directing traffic, and that's really it. So he's not as integral as he used to be before on a day-to-day operational basis. So I think that we've got. I think you're right, though. I think for Elon, because he is so focused on getting the company to AI, FSD, robo taxis, and Optimus, I think he will be staying there with a main role until that gets up and off the ground. Once that is off the ground, I think that'll be the moment where he can finally step away and let the team run it all.
Yeah, that would make a lot of sense actually. Yeah, because that's like kind of the biggest hurdle probably that they've had to face. I mean, granted, the whole way has not been easy. I mean, they've gone through like Dante's, every circle of hell to get to where they are. But FSD, I mean, just when they're like, other companies be like, all right, we have the lead, we're gonna get complacent. No, they decide we're gonna. I mean, this is always baked in somewhat, but just especially in the last few years, now we're gonna go and try and solve real world artificial intelligence. The only way you can truly have full self driving, they don't shy away from the challenge. And I mean, that's great to see. And it's what's going to keep them, ahead and in all of these relevant emerging industries and probably at the head of them.
Oh, I know. And then you try to think about like the OEMs trying to catch up, and it's like, are you really? I don't think so. Like, how
Yeah.
can you? And and just looking at some of the impact report, I'm like, literally right now, Tesla's saying OEMs legacy auto is paying for factories to get built. It's insane.
That yeah, kind of brings me to my next point here. Is perfect. I've seen this chart. Let me pull this up. A lot of people have sent this to me this week showing,
Oh yes.
oh, look, Tesla versus the world. Tesla's got, if you're not watching, if you're just listening, about a $1 trillion market cap. And basically every other automaker on the planet has about a $1 trillion market cap. So people have been using this to make the argument, oh, look, Tesla's so overvalued, yada, yada. Meanwhile, we should be looking at this graph where it compares how Tesla has no debt. Everybody else has 700 plus billion dollars of debt. Now, there was a misconception with this though. I was reading an article, and it's actually not completely fair to assume like Ford, for example, has something like 138 billion of debt on their balance sheet, but a lot of it, it's not like traditional debt. It's more so since these legacy auto manufacturers almost act as banks, and they're leasing out the majority of their cars or whatever and getting financing. So they basically get paid for their, let's say, a Ford truck over a 10-year time span because it's a little at a time with interest. But you know what? So a lot of that is what's baked into what on their balance sheet is marked as debt. But it's still a reason for concern, because you get another '07, '08 type scenario. That's what will bankrupt these companies, and it just is another strength Tesla has, that they're getting paid fully up front, the full car value. If you're selling an item and you're, only making money over the next 10 years, I mean, Tesla can deploy that capital 10 years faster.
Yeah. And as we were talking last time, GM in particular has to produce and sell 5 times as many vehicles as Tesla to make the same amount of money. And so if Tesla or if GM, there's Mary Barra said that said that they're going to pass Tesla in 2025 with 5.5 million EVs sold. And I'm like, all right, so that's basically equivalent to Tesla selling 1.1 million, which they're basically passed already this year. They were just short of that at the end of last year. So they're going to surpass that this year. So that means they're 3 years behind Tesla in profits. And that's if Tesla just decides to stop selling vehicles for the next 3 years and growing.
Yeah, well,
Obviously, isn't going to happen.
I think you've underestimated GM. After all, they did sell 99 Hummer EVs in Q1 2022, which is up a whopping almost what's that, 1,000% increase. Let's say from they sold one Hummer EV in the fourth quarter of 2021. So here's a company that sold 100 EVs and is going to catch Tesla, who just sold 1 million in the past trailing 12
Oh my
months.
God.
But
Watch it. Oh, they're coming
and it
up.
and it makes me think too. Everyone wants to point the finger at Tesla as the overvalued one. You know, I've been looking at the stats here, and who are the top electric vehicle manufacturers in the world, Tesla is clearly ahead. And the only other two relevant names I see is Volkswagen and BYD. They're the
Yeah.
only ones who are selling in the hundreds of thousands of electric vehicles. GM just sold 99. Like they're not even, so if you want to look at it like that, if you truly believe electric vehicles are the future, you could make the argument that the ICE is obviously has no value and even less moving forward as they, they're gonna have to work against themselves. But if we want to look at market caps and if we think that electric vehicles, even if considering nothing else, if this is strictly about automobiles and the electric vehicle market and Tesla's only an auto manufacturer, well, they just sold 1 million electric vehicles. GM is selling 100. And we're saying that in 5-10 years, I mean, with more and more states and countries passing deadlines to be all electric by 2030, I think the other companies are the ones maybe that are overvalued. I mean, GM's got a $40 billion valuation. They sell 100 electric vehicles. I mean, what does that say?
Oh, I know. And like even with the American legacy automotive makers, GM's not even first. Ford is. Like it's not even close. And Ford, I think, is doing a relatively decent job. And like let's look at Tesla for instance. Tesla obviously has, the factories, they're learning better and better from their factories, becoming more and more efficient. And it still takes China, a year and a half to 2 years to ramp themselves up to 500,000 vehicles sold. So if it's going to take 2 years for that to happen for Tesla, who has the experience with it, in order for GM to get to 5.5 million in 2025, that means that they need to have 11 factories up and running by the end of 2023. I don't know if they have, I mean, maybe they're holding secrets, but that 11 factories to pump out vehicles that quickly, I don't see it possible.
Yeah, and you just add to that the current trajectory of Tesla's factories and their ability to ramp up and expanding, having all the like Giga Texas is huge in Austin. That
Yeah.
amount of property they have there, they could fit 100 factories.
Oh, I know.
But just as they ramp up production, even with the four Gigafactories they have right now that produce the cars, they have the means right there to, I think, to scale up to at least 8 million, maybe even 10 million if they really can stretch it out. So they could do 10 million cars off the four factories they already have, basically, with a little ramping.
Oh, I know. And I know that they've announced, quietly the Shanghai expansion new factory. Berlin, they're in the process of purchasing new land. So by 2060, that'll be up and running because that's how slow it goes in Berlin.
Yeah,
And then Austin, I know Ross Gerber, who knows some things, is saying that, they're going to be putting up a new factory in Austin. And he's expecting a formal announcement soon to be coming out of there.
that
So I'm
would be
like,
big
that's
news.
basically three new factories already announced. And I have no doubt that they're going to be announcing at least one or two more by the end of the year as far as new apps, like actual new locations.
Right.
So, when Elon, and I have a feeling what we're going to end up getting is probably Elon's, maybe news about the new expansions, Elon's master plan part 3, talking about mass scale. And then he's going to start announcing all these factories. And I think we're going to see at least a tripling of factories by 2025, which is going to put us at 12 to 15 million vehicles capacity at that
Yeah.
point.
Yeah,
And that'll be insane.
2025 is our judgment day, we had said in the
Oh,
last
yes.
video.
Yep, that
That's
is
like
it.
when it'll be clear as day, like now you could make the argument either way. At that point we'll see who's really going to win and if there's any question about it. So having, with that being said, like I said, I could see them ramping up to 8 to 10 million with just the four factories they have, but obviously this is 5-10 years out, or maybe a little less, but a few years. Like, so the next, I think, 1 to 2 years is really the hardest point, where it's going to be a bumpy ride. It has been already, obviously, but we're going to just keep getting these wild swings. And, I'm really just playing the long game here because I do see the path and I believe, but, it's funny going back to those graphs that like I've been seeing everyone call out to say that, this shows Tesla's overvalued. And then maybe this is something I need to do this week. I want to make a graph where you show by market cap and then how many electric vehicles those companies have sold, not hybrids, strictly electric vehicles.
Yes.
And then it would paint a very different picture because, like I said, the only three companies that are even relevant on that map would be Tesla, Volkswagen, and BYD. So even if we took it, the way it is today, and let's say that the auto market in total, that's $2 trillion of market cap to go around, Tesla probably justifies their 1 million because they are number one. BYD and Volkswagen, if everything stayed constant, maybe they each are, $400 billion companies. And then everybody else, not even going to be, $100 billion. Because if it's all going to be based on electric vehicles and just looking at where we stand today, at least, we'll have to see what they do in the next couple of years. But like I said, can't wait to see the articles coming out when next quarter GM 500% growth on their EV sales. They'll go from 100 to 500 total sold.
I know, like if GM can pull off 5.5 million in 2025, I mean, kudos to them, amazing growth. But then you remember something that you and I talk about all the time as well. The more that legacy auto pushes for this, the better it is for Tesla,
Mhm.
because the way we're going right now is obviously across the board, automotive is down because supply is significantly down, so demand is super high. Once we come out of this and supply chains come back, inventory comes back in, that's going to be scooped up. But in that meantime, people are going to have their choice and the cost of EVs is going to come down. So then people are going to be deciding, well, what do I want to buy? Do I want to buy an EV or an ICE? And the choice will be clear at that point that they're going to want to buy an EV, but if it's not available, they'll have to buy an ICE if they are in desperate need of a vehicle. So that could continue the ICE market going, but otherwise, it's going to be whoever can produce the most. That is literally the name of the game for the next 3 years is whoever can produce the most is going to win.
Right. And, that's so key too, because creating the electric vehicle, as Tesla shareholders, we know that's the easy part. Mass production is what will bankrupt many of these companies, whether they can make it through that. Because, yeah, even companies like, Hyundai sold over 6,000 EVs in the first quarter compared to 153 in 2021. Okay, so that's putting them on a annual basis still of, let's say, 24,000. Nowhere near Tesla, who, let me say again, trailing 12 months did 1 million EV sales. Kia sold 5,000 in the first quarter. So we're talking about all these companies are going to sell maybe 20,000. Then you have GM, who literally sold 99. I mean, if GM were to 5x every quarter for the next year, what would that get them to? Maybe selling 100,000 electric vehicles. Tesla will be selling 1.5 million by that point. There's just no world I see that they can really catch up over the next 1 to 2 years. And this, again, like you said earlier, the next 1 to 2 years are just crucial for enabling whoever's at the top to capture the most market share, and then they're going to follow it up. Tesla can follow it up with full self driving, and then really mass scale and all these other crazy things.
Oh yeah, and one of the things I actually do want to look back at, I love to play devil's advocate and say, hey, yes, Hyundai is only doing 6,000 vehicles in a quarter, but when Tesla was doing 6,000 vehicles in a quarter, how did their ramp continue after that? What was their growth trajectory? So let's say that these companies are at that same point, and I would guess, and I don't even know because I'd have to look at the charts. I'm
I could
guessing it's
pull it up
probably
right
around
now.
2018 or so, maybe when Tesla was at that point when the Model 3 came out. So if that's the point that they were at, that still means that these companies are 4 years behind Tesla, and they've got to make up 4 years worth of production ramp just to try and catch up to Tesla. And that's if Tesla does not grow any further, which obviously they are. So
Right.
trying to catch them is nearly impossible. So if their goals are to get where Tesla is today in a shorter period of time than it took Tesla, then that to me would be a realistic goal for these companies.
Yeah, that's definitely true. I could pull up on hypercharts right here. So let's see. Tesla share. Okay. So Tesla, let's say, what did we say? 6,000. They did
Yeah.
6,000. So 2012, they sold 2,600 total. 2013, that was up to 22,000. So that is a pretty big. So yeah, if we allow these companies, let's say, to follow the same trajectory, but then from 22,000 to 31,000, and I feel like from 2013 to 2014, I feel like this is another thing you're going to see. You may very well see GM this year. Let's say they do 10x or 20x. So they go from selling 100 to 10,000, or let's say they would have to more than 10 or 20x. But let's just say that it rapidly advances, but you're going to have those hiccup years. You're going to grow quickly, and then it's going to slow down. I mean, 2013 to 2014, Tesla only grew from 22K to 31K, then to 50,000 in 2015, 76,000 in 2016, and so on. It really does take a very long time. Like it'll be very difficult to grow 50% year over year, let's say.
Right. And I look at, even the early years, there was only the S and the X. Those are the high end vehicles. So giving the legacy the benefit of the doubt, let's go with the lower end with the Model 3 and the Model Y. Even that growth, as quickly as it was for Tesla, they still had 8 years of practice with the S and the X before they got to the 3 and the Y. So even if the legacy auto has learned from Tesla and they're doing the lower end vehicles, it's still going to take them at least 2 to 3 years to catch that ramp up to pace to where Tesla's at now. And in 2 to 3 years, Tesla's going to be so much further ahead.
Yeah, that's a great point. And again, VW and BYD to me are the way things are today. And honestly, if we just look historically, Volkswagen's always been one of the top selling brands. Maybe Toyota if they can catch up, but they're really just starting EVs. But Volkswagen they sold or delivered 100,000 electric cars globally in Q1. Only 100,000 that they're doing. There was a lot of hybrids, but of pure EVs, they're only at 100,000, and like they're one of the better companies.
Yeah. Yeah. And then, I mean, and yes, China's got, and the Neo and the Xpengs, I have seen nice growth out of them, but they're still light years ahead of Kia, Hyundai, GM, Ford. So, just like Sandy Munro had said, he goes, we're looking 10 years down the road. These Chinese automotive makers are going to be the new Japanese wave of cars that are going to come in. And I know NIO is looking to have a headquarters over in California. So they're starting to poke their toes into the country, despite the fact that, we're getting delisting warnings and stuff in the stock market
Mhm.
last week. We've heard that numerous times.
Classic, yeah.
But once they put a factory up here in the US, I think that's going to be a huge sign that's going to turn around NIO.
Yeah, and Neo is yeah, definitely a force to be reckoned with. I mean, their growth is pretty good, and they've got a huge backing with the Chinese government there. So they're going to do
Yeah.
everything they can to ensure this company succeeds. I mean, and yeah, so even though BYD, you know, sells more cars, like Neo is probably the one that's most similar to Tesla, just in the car. They are more of that higher end, $60,000, let's say, like price range area, but Neo is kind of the most similar to Tesla, and with the backing there, I mean, they're like you said, they're years ahead of the likes of GM and Ford. So you could even put them, somewhere on that chart.
Oh yeah, and then it's crazy just the fact that GM and Ford are basically paying for Tesla's factories right now is so silly. Like like how much more efficient can you get than having your competition pay for your factories?
Yeah. And meanwhile, the Tesla, it's a busted growth story. The busted growth story continues as the delivery dates just keep getting pushed back further and further because there's just so much demand. Like, if
Yeah,
you had ordered I think now the Model 3, something like June to August timeframe is now looking more like the fall, September, November, October. And same thing with the other models as well. I mean, they've got a good problem.
oh yeah, and looking at the timing of it, because I've been talking to a lot of my subscribers are on both ends of the spectrum and talking about how it's really necessary for Tesla. How much longer can they keep this demand up? And obviously, we can see probably through 2023 they'll hold it. But at that point, some competition will have more vehicles out there to choose from. ICE vehicles will be back on the market with supply. So how are we going to keep Tesla's relevant at that point? And obviously, it's going to be relevant because it's good. But can they have a lower end vehicle that's going to come out? And this is where I'm like, I think the information we're getting out of China with this new factory is going to put us at a place where they're going to be producing the compact car. That is going to be the game changer. And then the robo taxi. So as soon as we get to that point where demand could be wavering, Tesla's ready to come out with something that's going to scoop up that demand. And then we've got FSD. And one of my subscribers today had also mentioned how, we were talking about how the comparison between Apple over the last 10 years and Tesla right now going through this kind of dead stage in a bear market, and how the growth after this could be, exponential for 10 years. And it's like, Apple really took off when they had the App Store. So with Tesla, it'll be FSD. And then Tesla will have their own App Store. And it'll be significantly more relevant when FSD is reality because people, don't have to focus on driving. They can focus on whatever infotainment that they've got in their car, and then they can utilize that. So I think that's, again, 2025 is that key year in my mind that, FSD, robo-taxis, compact car, app store, and who knows where Optimus is going to be at that point. If they're actually going to get to volume production later next year or 2024, who knows what's going to happen at that point. 2025 is going to be just a light bulb moment, and whatever automotive makers are actual players at the time will emerge, and whoever is not is either going to merge with someone else or die.
Now that's definitely all true. And just going back to what you said about demand, like, yeah, we can see the clear path. Let's just say, 2022, it's done. They're sold out, and likely 2023 is going to be similar. But let's say, okay, 2024, they do start to price out with these. Many make the argument now that Tesla is a luxury automaker still. Their cars are pricey, but the trend is going down in the long run. But either way, so they have, let's say, 2 more years where the demand, there's no issue whatsoever. And another argument I see is the margins. People are saying that Tesla has only had these crazy 30% profit margins because they're the only one that's doing this, blah, blah. And I think people it comes down to just not understanding. This has nothing to do with competition. This has everything to do with they're an innovative company from the second you step into the factory. Everything is innovation. I mean, with Tesla, it's almost like you're investing into the Gigafactories. You're investing in this manufacturing company because what are they doing? They're constantly driving down the cost to produce whatever it is they're producing, cars for now. They're doing it more efficiently. You just look at these innovations, like look at the Gigapress, right? Prior to that, for the front and back of a car, it would be hundreds of pieces. The Gigapress now enables them to make one piece for the front, one piece for the back of the car. It's all one piece. And so you pile on all these different things, what they're doing with the robotics, right? All of this leads to why they have those margins. Like it doesn't have anything. I don't see, obviously, when there's a ton of competition and we get to that point, where the prices are driven down, but it's still going to be the case of, okay, now what's going to set the one company apart from the rest when everyone's making EVs? It's going to be the manufacturing process. Well, who's the best manufacturer? We see is Tesla. No one else comes close. So they're going to have the highest profit margins with inevitably, as long as this continues, they continue to innovate, which I don't see how they would stop. They're not slowing down, So as long as they're able to continue doing that, they're always going to have the most money, let's say, to pump back in to making the most advanced technology. And
Oh yeah.
they're getting all the best talent. I just saw it again for 2021, a Universum survey for where all the engineering graduates want to work. Number one destination, SpaceX. Number two is Tesla. 3 is NASA. There's not one other automaker on that entire, top 10 list.
Yeah, GM was number 17 on that list, and Tesla had 3 million job applicants last year. Like Tesla literally has their pick of whoever they want to work for.
That's something. And again, it just adds to, there's so many intangibles with this company. There's so many qualitatives that you can't measure as a traditional Wall Street analyst. They don't understand. Quarter to quarter, it doesn't mean anything. But over a period of 5 to 10 years, who has the most money, the most innovation, and the best people who want to work there? I mean, it's a no-brainer.
Oh yeah, I mean Tesla is disrupting analysts at this point right now too. and going back to the talk about margins. So when it does get to that point where all the vehicles and they have to make their choice, that's going to be at least 10 years down the road before that even happens. And if it does happen between now and then, think about it. Tesla has 30% margins on their vehicles, whereas everyone else is in the negative. So if Tesla's margins have to come down because of competition, then competition's margins have to come down and they'll go even further into the negative. So like Tesla could even cut their margins in half and they're still going to blow everybody out of the water with profits. It's not even close.
Definitely. I just don't, it's like I said, if we're looking at this as EVs or who's the best manufacturer, whoever holds both of those titles or just one of the two, Tesla holds both currently, as long as that keeps up, that's the market cap. I mean, we're it's almost like we're looking at it all wrong. Whoever is able to produce the most EVs right now or moving forward in the next 5-10 years, that's the only like relevant factor. And even if the others start to catch up, well, when they're selling 1 million EVs a year and Tesla's only selling 1 million EVs a year, then we can, look and say, okay, maybe, this company's a little overvalued. But until that's the case, until they're anywhere close, it's just not an argument to say that, you know, Tesla's overvalued. I mean, they've earned that valuation with what they've been able to accomplish.
Oh, right. And looking at how many other startups are on that list, you may have like the Neo Xpeng, you know, Lucid, Palantir, or not Palantir, Rivian. So I'm like, you've got those other startups, but everybody else, nobody else is a growth. Legacy auto is not growth, not going to be. And even if you consider their EV sections growth, their ICE is dying. So it offsets whatever growth they're going to have.
And
So
yeah,
that's why you can value Tesla higher, because they are a growth company who are just getting started in a massive market. The total addressable market for Tesla is enormous. And that doesn't even include FSD, robotaxis, and Optimus, because those markets don't even exist yet,
yep.
as we'll know them in the future.
And you know, I think this is a perfect place to wrap up. Just looking at EVs with the ICE or the traditional legacy automakers, we know what their maximum was. So if everything goes perfectly and they just transition their business, they snap their fingers like Thanos, and all their ICE cars become EVs by a miracle, we know where they cap out. You know, GM had, let's say, 8 million sales a year. They're not going to get more than that. Most likely, they're going to get less, because what do we have now that didn't exist 10 years ago or was relevant? Tesla. You know, so they have the most to gain because they are carving out a chunk of this EV market or auto market in general that didn't exist. And who's really the losers here is every other company, or especially the legacy ones who were barely, you know, surviving, not having great profit margins to begin with, you know, struggling with ICE when you really think about it. How are they going to do that with EVs? And they're most likely going to sell a lot less EVs. So maybe
Yeah.
GM's total sales goes down to 5 million. So what does the company look like then when they're even, you know, lower sales?
Yeah, and going back to Ford, we'll find out in 2024 when they separate out their EVs, so we can actually see numbers with them. But thinking about how little transparency we have from them because they are not successful with EVs yet, it's going to be a while.
I think so. I think that's a
All right,
perfect place
everyone.
to stop.
We're gonna wrap this up. Hope you enjoyed this. I will link in the description down below the playlist for the first 10 episodes that are over on Investment Club. And if you are not a subscriber to Investment Club, check out Vin over there. He's got some great videos as well. We will check you guys out later. Have a great one.
Thank you guys. Thanks, Tim.